As you know, the Reserve Bank today left the official cash rate unchanged at 1.75%. The global outlook has improved, but major challenges remain, with ongoing surplus capacity in the global economy and rising geopolitical uncertainty. Global inflation and long-term interest rates have increased. New Zealand's financial conditions have firmed, with long-term interest rates rising and continued upward pressure on the New Zealand dollar exchange rate. The exchange rate remains higher than is sustainable for balanced growth, and a decline in the exchange rate is needed. Economic growth has increased as expected and is steadily drawing on spare resources. The outlook remains positive, supported by ongoing accommodative monetary policy, strong population growth, increased household spending, and rising construction activity. Recent moderation in house price inflation is welcome and in part reflects loan-to-value ratio restrictions and higher mortgage rates. It's uncertain whether this moderation will be sustained given the continued imbalance between supply and demand. Headline inflation has returned to the target band and is expected to return to the midpoint of the band gradually. Longer-term inflation expectations remain well anchored at around 2%. Monetary policy will remain accommodative for a considerable period. Numerous uncertainties remain, particularly in respect of the international outlook, and policy may need to adjust accordingly. What we've adopted is very much a neutral bias, if you talk about bias and stance of monetary policy. If you go back to November, we had an easing bias, a slight easing bias built into the forecast because we had a 20% probability of a further OCR cut built in. Now we've removed that and we're in essence saying that if you look at the risks around an OCR increasing or decreasing, we think that they're evenly balanced.